Hello, my name is Astron. In this video, I will present my assignment video for English for Academic Specific Purpose course. In this video topic, I will discuss three topics. First is balance sheet terms in English. Second, income statement, profit and loss term in English. And the last is general accounting term in English. Okay, for the first topic, we will discuss about balance sheet terms in English. There's several terms in balance sheet too. We will discuss it further. A balance sheet is an accountant statement which details the income and spending of organization within a fixed time. This is a critical tool in in accountancy to understand business assets and liabilities. Okay, the first term in in balance sheet is account payable. I will put account payable in sentence. Uh, it will sound like we currently have large account payable list to our suppliers. Payable is money that is owed by a business to its supplier. This is shown up liability in balance sheet. Second is account receivable. In a sentence, we will say like you should be constantly aware to how inflation and can discount your account receivable. Account receivable is money that is owed to the business by its customer. This is for goods or services that have been delivered or have not yet been paid. Third is asset. Asset He has asset in form of stock, mutual fund, and property, an item that a company or a person owns that has monetary value. These come in the form of tangible asset, typically physical asset owned by the company such as property, equipment, and land, and intangible asset not physical in nature, such as patent, copyright, goodwill, and trademarks. Fourth, we'll discuss about book value. In a sentence, book value can be put like this. The proposed purchase price is approximately 2 times to the book value. The book value is the total value of a business assets found in the balance sheet. This number represents the value of all the assets a company owns if they are liquidated, sold to generate cash. Fifth is equity. When the company collapsed, the, its equity was wiped out. Equity is the remaining value of a company after all liabilities have been removed. Equity is a portion of a company owned by its investors and shareholders. It can be calculated as asset and liabilities. Asset minus liabilities. Inventory. We can put inventory in a sentence like this. The company is managing the market and sell its product, keep, keeping inventory low. Inventory represent a company goods that remain unsold to its customer. Inventory management is typically count with three stages of the production. First is raw goods, second is in progress goods, and the last is goods that are ready for sale. Seven is liabilities. We can put liabilities in sentence like this. The company has enough money to cover its existing liabilities. Any debt that a company has yet to pay, whereas account payable is money owed only to supplier. Liabilities can include money that business also owes to the staff, as well as loan, mortgage, and bonds. Okay, that's all for the first topic in balance sheet terms in English. We will go further to the second topic. It's income statement, profit and loss term in English. The income statement for profit and loss statement is the second of the two most common financial reports. It shows the revenue, expenses, and net income or loss over a period of time. Okay, next we will discuss about several terms that link in income statement. First is cost of goods sold. We can put cost of goods sold in a sentence like this. IKEA's cost of goods sold fell by 3% in the last quarter. The cost of production for the goods sold by a company, this number includes labor cost, and the raw material to used to create the goods. Indirect expense such as transport of a good are excluded for this cost. Then next we will discuss about depreciation. We can put depreciation in sentence like this. The company was hurt by high depreciation costs. Depreciation is when an asset loses value over time. Depreciation commonly happens when physical assets break or wear out, such as when an office computer gets damaged, a machine breaks down, a building starts to decay. A land is the only physical assets that appreciates over time or increase in value. Then we will discuss about expense. We can put expense in a sentence like this. Many companies shut down during the weekend to save on expenses. Expenses are money spent by a business in order to generate revenue. Expenses are the sum of all activities that a business is using to try and reach profit. They are split into fixed expenses, set amount that business has to pay regularly, like rent, salaries, wages, and variable expense, which is might cost more or less depending on external factors such as advertising, commission, utility bills. Okay, next we will discuss about gross profit. We can put gross profit in a sentence like this. Gross profit is at its highest level in more than 3 years. The total amount of profit a company makes after subtracting the costs associated with making and selling its product. When gross profit is calculated, the cost of overheads like rent, travel costs, and advertising are not subtracted. Next, we will discuss about net income. We can put net income in a sentence like this. Apple had set record in both sales and net income figures. The amount that earned by business in profit after all costs are deducted, it is calculated by taking revenue and subtracting all the expenses within a period of time, including overheads, depreciation, and tax. Okay, the last we will talk about revenue. We can put revenue in sentence like this. The football club estimate that it will reach a record annual revenue at $600 million. The income statement is the income a business makes from its activity before subtracting any expenses. This usually come in form of sales and services to customer. Revenue also refers to as sales or turnover. Yeah, that's all we talk about for the second topic, income statement, profit and loss term in English. Then we will discuss about the last topic. It is a general accounting terms in English. There are some accounting terms in English that aren't linked to the balance sheet or income statement, but are still essential to know. Take a look below to learn the most important general accounting terms. First is cash flow. You can put cash flow in a sentence like this. A strong brand identity, great management, and positive cash flow are essential for your company to be a market leader. Measure how much money is moving into and out of a business during a period. A company will create more value for its shareholders by generating positive long-term cash flow. A company will create negative cash flow by spending more money that it make over a specific period of time. Next, we will talk about credit. We can put a credit we can put credit in a sentence like this. The danger with credit card debt is the increase in interest and are incremental. When used as a noun, credit records a sum money of received by a business and listed on the right-hand column of an account. A company credit and debit will always equal each other, ensuring the balance sheet and income statement are always in balance and accurately reflecting the income, expenses, and assets, liability, and equity within a business. An example of credit is increase in liability that will be paid a later date. Many people and companies buy on credit via the use of credit cards when they do not have enough cash to make a purchase and wish to pay the cost a later date. Next, we'll talk about debit. We can put debit on a sentence like this. Your account will be debited for the cost of your insurance every month. When used as a noun, debit records a sum of money owned by a business and listed on the left-hand column of an account. An example of debit is the purchase of a new computer, which is an additional asset. However, debit can also use as a verb, meaning when a bank or financial organization remove money from customer account. This most commonly achieved via the use of debit card. Next, we will talk about diversification. We can put the diversification in the sentence like this. The company was looking into diversification to generate new resources of revenue, a technique of allocating resources and investing time, money, and energy into different activities. For example, a company may decide to diversify and expand into new markets and producing new products. Next, we will talk about fixed costs. We can put fixed costs in the sentence like this. The business is reducing fixed costs, continuing to grow and balance growth and profitability. Business costs that remain the same no matter the amount of goods produced. Example of fixed costs include rent, salary, and certain tax. Next, we'll talk about forecasting. We can put forecasting in a sentence like this. After analyzing the account of the last few years, he was forecasting a challenged Q3 for the business. The act of using past data to predict future costs, growth, and financial trend, business use forecasting to help them plan for upcoming expenses and decide how to allocate their budget within a set period of time. Next is interest. We can put interest in a sentence like this. The loan carry a very high interest rate, so I did not make it. Interest is a fee. Interest is a fee for borrowing an asset. It can be considered an expense to borrow and income to the lender. Interest is essentially compensation for the asset or services that is lent. This number is usually calculated as percentage of amount of money borrowed and is added onto the cost of future repayment. Next is next we will talk about the liquidity. We can put liquidity in a sentence like this. The business believes that this change will result in improved liquidity and profitability. The ability to get your hand on money whenever it is required. Cash and saving are liquid assets because they can easily be changed into cash very quickly. Non-liquid assets include property and machinery which cannot be changed into cash quickly. Next, we will talk about overhead. We can put overhead in a sentence like this. The business had lowered its overhead costs by canceling their rental lease and working entirely remotely. A consistent cost of running a business, overhead or overhead costs, are the expense of running a business that do not include creating or producing a product or services. They are all of the costs on the income statement except for direct labor, direct materials, and direct expenses. Overhead include the cost of renting a shop, business insurance, and marketing. Next is payroll. We can put payroll in a sentence like this. The annual payroll of Arsenal Football Club is 103 million euro. I'm sorry, pound sterling. 103 million pound sterling. The total amount of money to be paid to company employees in the form of wages, salaries, and bonuses. Payroll can also refer to company record of previous payment made to the employees. Next is return on investment. We can put return on investment in sentence like this. They spend $1,000 on marketing, which is produced $2,000 in profit. Therefore, they log a successful return on investment on marketing spend of 50%. Return on investment is term used to discuss the ability of an investment made to generate income for the business. Return on investment is the most common measure of financial performance for a business, although the exact calculation varies depend on the context. One thing is constant, a project or investment with higher return on investment is always better. Last, we will talk about variable costs. We can put variable costs on sentence like this. Total cost is when you add fixed costs with your variable costs. Business costs that increase or decrease depending on the volume of a company's sales or production. Example of variable costs include the cost, raw material, and product packaging. Okay, that's all my presentation. I'm sorry if I mispronounce a lot or if I said something wrong. Thank you for watching this video. I hope you can enjoy it.